Investing is simple, and I'll show you why in less than 10 minutes. In fact, there's an easy way that you can start investing in your 20s and end up with over $1 million in your 30s. More on that later. But we gotta answer this question first. What the hell's investing? So investing is basically putting your money into an asset. Now, think businesses, stocks, real estate. Then this item will make you more money in the future. Let's say you put $10 into the stock market. Your hope is that the stock market will go up in the future, and thus this stock will be maybe $20 or $30 down the line. This is the key to becoming a millionaire in 15 years, by the way.
I'm rich.
But here is the age-old question we gotta answer first. Ash, why should I invest when I can just save it? Well, I'm gonna show you how saving alone is actually low-key sabotaging you. Here's the one-word answer. Inflation. And here's why the I word will f you up if you don't pay attention. So let's say you have $100,000 in your savings account, and props to you for that. I'm so proud of you.
Good job.
And hey, even if you just have $1,000 in your savings account, drop a like as well, because I'm still so proud of you. But you know what? In 10 years from now, it can only buy approximately $66,000 worth of stuff because the historical average annual inflation rate is 3%. So you see, if you put everything in a savings account with like 0.1% interest rate, inflation will eat away at the value of your money. So that's why you gotta find a way for your money to return more than 3% every year. Also, subscribe if you'd rather be a millionaire in your 30s instead of just wallowing in the fact that your favorite mozzarella balls are now $10 instead of $5. Which is really annoying, by the way. Which is where investing comes in. But out of these so many options out there, what should you invest in? Well, you know what? The one I want to recommend, it's so easy that dead people can do it better than you. Let me explain. So what should you invest in? Stocks and bonds. More specifically, index funds, which is the joyride that'll take you from broke to millionaire in around 15 years. Here's why index fund investing is even recommended by investing powerhouses like Jack Bogle and Warren Buffett. So let's take a look at the 4 main reasons. Number 1, you can start with as little as $1 with apps like Robinhood by purchasing fractional shares. Number 2, it's really accessible. Like you can find these index funds easily through a brokerage or investing platform. I personally love to use Questrade because they offer 0 commission fees when buying and selling ETFs. And number 3, it's relatively low risk if you use the buy and hold method, which is why dead people are sometimes the best investors. And number 4, most important, is that it is so easy you can set it and forget it. But like, why though, Ash? Why are dead people the best investors? Let's find out.
The zombies are coming.
The Simple Path to Wealth talks about a study done by Fidelity that showed how powerful the buy and hold method is. They saw that dead people's portfolios actually outperform actively managed portfolios because they didn't try to time the market. Like, if you look at the historical stock market charts, no matter how bad recessions got, the market always went up over time. So literally, the only way to lose is to sell when emotions run high and you panic sell while running around like the fishies in Bikini Bottom. This is why dead people are the best investors. Because there's no way to fiddle with their shit when you're dead. Of course, you can adjust your portfolio over time for better results, but even without doing that, the buy and hold method already works insanely well. And now that you know this strategy, let's break down the secret behind what makes index funds so powerful. All right, let's start by answering this question. What the
Fadoodle cakes. Son of a butternut squash. Oh, you got a fat astronaut.
is an index fund anyways? Index funds are basically funds that track a specific criteria in the stock market. For example, the VTI tracks the S&P 500 index, basically the top 500 performing companies in the United States. Here's why buying and holding an S&P 500 index fund can make you a millionaire in your 30s. Number 1, the market always goes up. 2, the annual return averages 8 to 10%. 3, which outpaces inflation, which is 3%. And an index fund's expense ratio, aka how much it costs to own, is usually very low, like 0.05% to 0.25%, compared to actively managed funds charging 2 to 3%. And you know what? Think 1 to 2% doesn't matter? Here's how much fees you'd pee. Ew! Yeah, piss on that. Piss on those feeds. Ain't nobody like those. And you think 1 to 2% doesn't matter? Well, here's how much fees you'd pay if you invested for 30 years. Almost $1 million. Girl, you could retire twice with that money. So as you can see, as your investments gets bigger, that 1 to 2% matters a lot. And now that you understand all the pieces, let me show you the $1 million math. Okay, let's hop over to an investment calculator. And let's say you start investing at the age of 24. And you pay off your student debt, and now you are starting with a clean state of $0. And you invest $3,000 a month for 15 years. And if you invest in a S&P 500 index fund like VTI, your annual return will be around 8% a year. And drumroll please. And in 15 years, at the age of 39, your portfolio will have approximately $1,012,000. I know, it sounds so kooky beans, but you can run the math again and again and get the same results. Like, they do be true. The math will be mathin'. You know, I just want to make clear that I am not a financial advisor, but I do be trying to get you rich, so subscribe. But you know what? I just want to share with all of my fellow young adults out there, like the knowledge that I have accumulated over the 5 plus years actually, of investing. So if you want to learn more, there are 2 books that I highly recommend. So the first one is The Simple Path to Wealth by J.L. Collins. The second one is The Boglehead's Guide to Investing by Jack Bogle. And if you want, you can grab a copy of your own down below. These are the 2 books that I have read before I started investing around 20. And you know what? If you're like, hey, maybe this is actually possible for me as well, well, the next video is gonna hit. These people use the exact same strategies and retired in their 30s. Click on this playlist to check out how. All right, I'll leave it to it. Let's go. Let's go. Let's go. Okay, bye.